Good morning, everyone. This is Rudy, Mr. Roxy, or Investor Investor. What I want to do today is show you how you can not only generate a very healthy profit from your stocks, but how you can actually get to keep that gain or at least protect that gain. So arguably anyone can get lucky. In some ways, the stock market is a bit of a gamble. For example, if you had elected to invest in Tesla, by now you were sitting on a massive gain, and I hope that you would have taken some profit along the way. I did not invest in Tesla, but I'm using that as an example just to tell you that effectively, in theory, anyone can get lucky. It's what happens after that, which is the difference between actually building generational wealth or building wealth, for starters anyway, especially if you're young, um, and losing the gain on paper. So I'm going to show you how to do that, and I'm going to show you what I did in my previous video.
This is what you came for. This is what you came for. I'm over. This is what you came for. I'm on. This is me. She said, I'm ready. So come and get me. I'm over here. I'm over here.
Okay, guys, in this video, I'm going to take myself off the screen and show the presentation to you so that you'd be able to see the entire presentation so that I don't have a little thumbnail picture sitting up there in the corner, kind of obscuring your view. This is just common sense investing. Anyone can do this. I'm not even giving you an investment advice. All I'm giving you is financial investment education. Whether you use it or not is entirely up to you, but I'm going to show you how it's done, and it's really, really easy. So stick with me and I'll walk you through it. All right, guys, so what I'm going to do here is show you how I'm going to protect this 30% gain that I generated in small cap energy stocks in just 3 weeks. Now, you will recall that if you've been following my channel, that a few weeks ago, in fact, about 3 weeks ago, I actually sold my position in Pfizer with a trailing stop. I had no intention of selling my Pfizer position, but I was sitting on a nice big fat gain. I wanted to protect that gain, so I plugged in a trailing stop and I said, if Pfizer should pull back 10%, get me out of here. I'll take my profit, pay my taxes, and move on. So at that point in time, what I did was I invested approximately half of my gains in Pfizer in 5 small cap energy stocks. That was 3 weeks ago. I'm going to show you all the details so that you can follow along and that you can replicate some of the stuff for yourself, depending on what it is that you're interested in or what you want to invest in. As usual, do your homework. I'm just going to show you what I did. Right. So December the 18th, I made a video. It wasn't watched by many people. I think only about 400 and something, maybe 500 people watched the video, which is okay. What I wanted to do was say, I'm taking some of my Pfizer money and I'm going to put this into a few small cap energy stocks. I used 5 stocks as an example, and I used the Peter Lynch example, which I explained in detail, saying if one of them were to go to zero, in other words, bankrupt, and 1 or 2 of them were to underperform, if you just get a 10x or 20x on one of them, your portfolio would be right sized. So if you had not seen this video, you can go back and watch this video. But anyway, I'm going to give you kind of an overview of how I used Peter Lynch's strategy on this one, and I'm going to tell you what happened. So I took the gains, as I just mentioned, and I invested $50,000 in 5 a relatively small cap. I say relatively small cap because there's one over here, CCJ, which is Cameco, which is actually a $5.8 billion corporation. The rest of them are tiny. But if you look at the amounts, this was my investment dates. The dates vary. The first investment I made was December the 17th. Then I made a few days after that. And then I even made just a couple of days ago in January. So these companies over here represent the 5 equities that I invested approximately $50,000 into. So there's 10 over there, there's 10 over there, there's 20, there's 30, 40, and the rest of it adds up to about 50. So effectively, that's what I did. I took $50,000 of Pfizer money and invested it in 5 small cap stocks. Since that time I did that, Pfizer is down another 5%, which means if I had stayed in my Pfizer position, I would have been down another 5%. So here's the actual sort of breakdown of the deal. AR is Antero Resources. I bought 2,000 shares of Antero Resources at about $5. It's currently trading at about $6.21. I also purchased 3,500 shares of Energy Fuels for approximately $3.20. That's currently trading at about $4.20. By the way, these screenshots that I'm sharing with you were correct as of Thursday evening, January the 7th, because I'm traveling on business. So I pre-recorded the screenshots, or took screenshots before I actually recorded this video, because I knew I was going to be away on business and I wouldn't have the ability to do that. I also bought 50,000 shares of Paladin Energy. Paladin Energy is a small cap uranium miner out of Australia. I purchased those shares for about 20 cents a share, and it's currently trading at about 24 and almost 25 cents per share. The next one I bought was a company which is also a uranium corporation called GoVX. This one's Canadian, and I purchased it on a variety of different buy orders, because I had some buy stops sitting there waiting to buy at a certain price. I managed to pick up the bulk of them, about 50,000 for 15 cents. I bought another 11,000 for 17.5 cents, and another 2,500 for about 17.5 cents. So my average purchase price on GoVX is probably in the range of about 16 cents, perhaps just under 16 cents. It's currently trading, or was trading, at 21 cents. And the last one I bought, which is the large cap one that I mentioned earlier, is Cameco. Cameco is a Canadian corporation, also has a uranium focus. I purchased Cameco at $12.94. This is actually my underperforming one of the 5, but it's also the biggest, so I don't expect it to have the same kind of uptick. And it was currently trading at $14.68 when I took this screenshot on Thursday. So when you look at these equities, and I'm just going to say it's a 21-day gain, even though some of the gains are just a week old. If you look on the far right-hand column over here, you see Antero Resources, Cameco, GoVX, Paladin, Energy Fuels, and you can see the actual gains on my positions based on my opening price compared to what it's currently trading at, or what it was currently trading at. I just picked one of them, which is kind of in the middle of the range, which is Energy Fuels here at the bottom. So U is the ticker, and that's the one that I shared with you. I purchased for $3.20. It's currently trading at $4.20. My intent here is not to show you how smart I am. My intent here is to show you how common sense can make you wealthy if you manage it properly, right? So if I wanted to brag, I would have taken one where I had made the most profit, but I'm using this one as an example because it's sort of in the middle. So Energy Fuels has returned 31% over the last week, or 1 week to 3 weeks since I opened the position. You can see at the bottom of the screen here, this is my gain for this period, and the percentage gain is 28%. So earlier I said if I had stayed in my Pfizer position, I would have been down 5%, and now I'm up 28%, which is almost 30%. So now you can say, now what, Mr. Oxy, what do we do? Well, this is why I use trailing stops, and I'm going to show you what I'm doing here is not to be greedy. It's just to protect my gains. So I have a sell order. So these are trailing stops that are sitting in my brokerage account as sell orders. And I'm basically saying, if which is Energy Fuels, were to hit $3.67, get me out of there. That means I've plugged in a trailing stop of 15% based on its current price, which will pull me back down to $3.67. Now I'm up about 30%, which means if just broadly high-level math, if I'm up 30% and I plug in a 15% trailing stop, should Energy Fuels pull back 15%, I cash out and I take a 15% gain. Because I took a gain, I can reinvest in U immediately thereafter if I wanted to. If I take a loss, I can't do that, because if I buy back into it, it becomes a wash sale. So you can see I have more trailing stops sitting over here. With Cameco Corporation, I'm up about 15%, so I plugged in a 10% stop. As it get me out of there at $13.38. I'll take my 5% gain, get out, and look for something else. And the same with Antero. Antero Resources, I have a larger gain than Energy Fuels, so I plugged in a 15% stop. I'm basically saying if any of these stocks pull back a large amount of money, a large percentage in this case, get me out of there. I'll take my gain, I'll pay my taxes, and I'll move on, right? So as I said at the start, this is not investment advice. This is common sense advice. Anybody can do this. I actually made a video on December the 1st. If you haven't watched it, you can take a look at it. You can see the worry in my face as I'm trying to explain trailing stops to you. And behind me, you can see my blackboard where I was trying to explain how trailing stops works. These are easy to work with. LIFO and FIFO up there on my blackboard means last in, first out, or first in, first out. You have a few choices that you can make. Anyway, if you want to watch that video, it's in my library. It's on December the 1st. Take time to watch it if you want. It's just education, guys. It's free. Use it. Protect your gains. Make some money. So what do you do never to lose money? Firstly, you may have a stock that's underwater. So let's say, for instance, instead of picking these 5 energy stocks, I had actually selected to invest in Pfizer, which is where the cash came from. Remember? So now Pfizer is underwater. In fact, my Pfizer position when I sold out is 15% down from where it was when I sold it out. So let's say I bought Pfizer and not these energy stocks. So I'm actually underwater. What do? Firstly, I investigate to see if there's an underlying fundamental reason why I should not be invested in Pfizer. Assuming everything's okay and I get the vaccine noise out the way or whatever, I can reinvest in Pfizer, or I can do nothing. I can just sit there. I can just wait. I can do nothing. I can wait. Or if there's nothing fundamentally wrong with the company, maybe I can buy a little bit more. I did that with Occidental Petroleum time after time after time. If you watch my very first video that I made, which is only in July of last year, I had approximately 2,500 shares of Occidental Petroleum. Today I have about 6,500 shares of Occidental Petroleum, and I'm actually in the money. Whereas in July, when I made my first video, I was hopelessly underwater. What do you do if the stock is flat, so it hasn't moved at all? Like Cameco hasn't really moved much for me. Just pay attention to the stock. Check in every day. Don't do anything. Just wait. Take your time. There's no 3 swings in and you're out. You know, it's not baseball. And if you're in a profit situation, which is what I'm explaining in this video, protect your gains, for example, using trailing stops. There are a variety of other stop orders you can use as well to protect your gain. I like trailing stops because if the stock keeps going up, 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 the trailing stop just follows the stock all the way up until eventually it gets to the point where you might be up 50%, 100%, 200%, and then your trailing stop kicks in and sells out when it pulls back 20% and you cash all your gains and take all your profit. Guys, I hope this is helpful to you. As I said, it's not financial advice, it's common sense investing. What I'm doing is I'm helping you to think of things that I've been successful at doing, which is taking the emotion out of your trading, using technology as the trigger for a buy or sell. Do your own homework all the time, because if you want to invest, you need to know what you're investing into. Don't listen to any experts, especially the guys on TV. They just give you bad advice. And I want you to have this happy face instead of my concerned look that I had on my trailing stock video just a few minutes ago. So let me know in the comments what you think. Let me know if you do it differently. Let me know how you protect your gains, or let me know what kind of profit you're looking for before you cash out, if you cash out at all. Share some of your trading philosophies. Let's help educate each other and become an enlightened group of intelligent investors who can all collectively make some money. So guys, that's a wrap from me. I hope it's helpful to you. I hope you end up making some good gains in the marketplace and that you protect them. So take care. If you haven't hit the subscribe button yet, please do so. Obviously, I'd like to build a large community of like-minded investors. Thank you for taking the time to watch this video. Do subscribe and let me know in the comments what you think. See you guys soon. Be back shortly. Take care. This is Mr. Oxy signing off. Bye-bye.